It's June 4th, but it's 50 degrees in New York. What can you do? All right, guys. So thank you for coming. Today's webinar will be stops are pauses. Okay. Now, the reason for pauses and stops aren't really to get out of a bad trade. Okay. We don't have to use it necessarily just for bad trades. Okay. And that's the problem, is that the perception out there for most traders and how they're taught is that a stop is the end of a trade that didn't work. And that's how people, excuse me, that's how people really understand it. But the way we teach it is a little bit different. The way we teach it is that stops doesn't have to mean that your perception or your argument for taking the trade is over. Maybe it's just a pause because you feel that you would rather buy some time outside of the outside of a position and then wait for it to come back and then provide better information that will allow you to make a better decision to continue to take the trade. And I've provided actually about 4 to 5 different scenarios for you. So one thing that we want to talk about is how a stop is buying time. Now think about it this way. Let's give you an example. And at any time, guys, if you have a question, please, by all means, I'm one of those guys who doesn't mind interrupting and getting a question answered. So the reason why you're buying time is, let's say, for instance, you get into a trade and you get into a breakout. Let's just say, for instance, the easiest thing, 52-week breakout. And as it breaks out, you get in long, and then all of a sudden, it comes down right through the 5 MA and starts coiling back down. You want to get out right away. Now, you got out right away, but you still feel that it's still going to go higher. So you had two ways that you could have branched out from here. You could have continued to hold it and have that faith that it's continued to go higher regardless how much it goes lower. Or you could say, maybe it's not ready yet. Let me get out, reanalyze, and see if I can come in later when it has better definition. Okay. Now, it's obviously a double-edged sword here in both instances. For instance, if you want to buy time, then guess what happens? You're going to lose a couple pennies of profits from entering in a little bit later. Okay? Exactly. Tesla today, which I'll get in a little bit later. I have a better reason to use that one, Ephraim. So yeah, you may lose a couple cents for buying some time, but in the long run, it helps you a lot. Okay? Especially in a market like this. Now, I'm not sure how many of you are actually following the market today, but normally the market is providing some good opportunities. This week it's been very dim, and it's most likely related to tomorrow's news on Greece and some job numbers as well. So we'll have to see till tomorrow before we could really gauge whether the market will come back with some volatility. Now, a stop tells you there is something wrong with the formation premises, something about the stock, something about your management. It's either too tight, premature, or too late, just like what happened with you, Ephraim, right? Premature. In most cases, in this type of market, we're pretty premature, okay? There's a lot of fake outs out there, especially during choppiness on the wider time frames. Now, tight is better than late in most cases, as long as you learn from a stop. A stop is the best inside information you can get next to order flow. Who better knows how strong a stock is than someone short and vice versa. So let's go to the next one. Now, stops depend on the original strategy and premise for the trade, and this is a real good factor that you have to really take into consideration, because a lot of people get confused. Now, we use multiple time frames to be able to gauge whether we're going to get into a trade or not. So we use the 1 minute, the 5 minute, the 15 minute, and the 60 minute. All right, guys. Now, let's say, for instance, we see a setup on the 1 minute. Okay? Now, if we see a setup on the 1 minute, can you use a stop based off of the 5 minute? Can anyone help with that answer? Would that make sense? If you have a setup and you're basing your trade off of the 1 minute chart, but you're basing your stop off the 5 minute chart, does that make any sense? The answer is no. Yeah, the answer is no, because if the 5 minute didn't provide you with any information in the first place to gauge your decision in taking the trade, then you shouldn't be using it at all. Okay, the only time you should be using it is once you're way out of the area in the Bollinger Bands on the 1 minute. Okay, and that's an example for bullet 1. Something mini pups are just basically not a trend continuation, but being able to take advantage of momentum in between a trend. Okay. Now, precautionary stops are based on the 1 minute stochastic reversals, or if it breaks below the 5 MA, which you'll see soon or shortly in the next couple of exercises I have for you. So when in doubt, stop out and reassess. And let me give you an example. So today, Ephraim, he was in a trade with us in our chat room with Tesla. And his first basis was that it had a certain setup on the 1 minute. And he thought that it would take, that it would break out. Now, once he got into the trade and everything was all said and done, and all the checkpoints that were needed to get into the trade were done, the only thing that happened is that it didn't break out the way he wanted it to. Okay, so right away, the argument is starting to deviate away from where you began to perceive, and then what happens is it got choppy, and as it was getting choppy, he was continuing to hold on to the position, and he was asking whether he should be getting out, if he should be averaging, what is going on. And I told him that if he was in the trade for too long already, which was 15 minutes, then it was best to probably stop out. Okay, there's no point to get into, to stay into a choppy position. And I'll tell you why. The longer you're in a position, the greater the exposure you're putting on yourself, which also equals the greater the risk. So the more exposure and the more position and the position size, the greater the risk. Okay, so if your trade is naturally taking longer than expected and it's still not moving into profitability, or it's taking way too long to really move into the targets that you wanted, then you have to decide whether you want to shave some shares off so that you can continue to hold longer with less exposure. So you're balancing yourself out. And this is how stops could be used as well. So if you're starting to doubt the position, don't be afraid to stop out and reassess, especially in this type of market. That's probably the smartest thing to do. Now, before I start to get into the examples, does anyone have the questions on that? Anybody who's not from our chat room? Or maybe someone from our chat room, doesn't really matter. All right, so here's our first example. We have something called a mini pup forming here. And as the mini pup is forming, it breaks out. And you can see this red line is our entry point. Okay, guys? So this red line is our entry point, and then it breaks out. Now you can see that we got long. What happens next, guys? It breaks down, right? Now, normally for this type of trade, a mini pup, okay, what you want to be looking for is the stop is the 5 MA. Now, let's say for instance, you were stubborn and you didn't stop out at the 5 MA and you took it all the way down. Where would you guys stop out later on? Would you stop out here, or would you continue to hold it all the way back up here? How many of you would stop out at the 5 MA, and how many of you would stop out much lower in this type of scenario? Yep, that's probably when you would give up most, right? Once it breaks, slips through the middle Bollinger Band, you probably want to give up. Okay? So why take so much of this space, of this loss, when you could have nipped it in the bud right here, when you started having doubt in the first place? Okay? That's when you should have started. Now, let's see how this works out for us. If we would have been doing it the right way and reassessing and get out right here, okay? Then we would be able to take advantage of the next move. Do you guys see that? Do you see the next move that opened up? So just because this failed doesn't mean the trade is over, guys, okay? It just means we have to reassess. So you get out, be confident that you're doubting this situation, okay? Because when you got in, you expected this to start expanding and at least reach to 77.20, somewhere around that level, okay? So instead, you're able to take advantage, get out here, take maybe a 6-cent loss, come back, see the next mini pop, and realize that the second wave was the right wave, right? We got it prematurely. Does everyone see that? We saw that it was a premature move. We got out, okay, and then we re-entered, and we were able to take the move correctly. Any questions on the first example, guys? Okay. Let's go to example 2. So this example is called, this setup is called an inverse pop, and what we're looking for in reality is a trend continuation. So we could see here that the price went down, came back, played around the middle Bollinger Band, and then came down and started to have some selling pressure or buying pressure before the selling pressure really took over. Now let's say you got into this short. Okay, you got into this short, you maybe take out some shares over here, and then what happens? It comes back up, okay? And for most of you, you could hold to the middle Bollinger Band, but as the strategy starts to roll out, you really want to be trailing the 5MA. So if you didn't trail the 5MA, you could have been stopping out a lot later instead of right around the 5MA. And then you could have realized that a couple minutes later, okay, we had the next setup right here, okay? And this is where it started to flush. So the second wave again, the premature move, okay, allowed us to take maybe a couple cents, but then it reversed on us, and we were smart enough to just get out at the 5MA, reassess, and then take it again for the longer run. Does everyone see how that stop? How a stop could be a pause and not just the end of a trade. It's good to be able to reassess it. You shouldn't be scared that you may be missing a trade. You have to have conviction that with your setups and have some sort of checklist saying, okay, it moved 5 cents already my way after the setup went. Now I should let it roll and continue to go. And if it breaks the 5MA, I'm going to get out. Okay? And then we can reassess and then retake it again. The 5MA? Which MA? You from? 5 is the yellow. This one right here. Do you guys see my arrow or no? No, right? You don't. I need to see something. Hang on. No, it's not what I need. There you go. Do you guys see my pointer now? Ephraim, do you see it? No? Give me a sec. And I guess I'll just have to use... Alright, you guys see that? The drawing? Right? Okay, good. Let's move on. So, example 3. Now this one is a perfect example for you, Ephraim, because you were in this type of situation. You had choppiness, right? You had choppiness here. You had an inverse pup, right? You had an inverse pup. You had a trend continuation coming with some selling pressure coming back down. Now, the problem here is that it's so choppy. The Bollinger Bands are tight, okay? You don't know whether you want to get into it or not. And let's say you do get into it, okay? You get into it, it slips down, all right? And now you think that it's going to continue to hold the 15 MA. Are you going to hold the 15 MA or you should be getting out the 5 MA? That's your question. Now, in most cases, you should be getting out the 5 MA because if it wants to continue to go down, it will most likely provide you with another entry to continue to go down. So once again, I wouldn't consider it a stop. I would consider it consider an early stop to reassess and see if it'll continue to move down your way instead of taking it back up all the way to the middle Bollinger Band. You don't want to bring it back up here. You want to stop out here. And if you see here, and we continue to go forward, you can see that there was also a plan A, right? A reversal. So by getting out early, okay, and reassessing, we were able to take this level, reverse it right away for the long move. Do you guys see that? All right, and that comes from here as well. You guys see my markers or no? Okay, good. So you see it. All right, now I'm going to show you an example of when you don't stop out. Okay? So we have something called a mini inverse pup right here. And this is where you are taking advantage of a current trend. And as we can see here, we have a green candle after a series of red candles. Now, obviously the buyers here are trying to break above the 5 MA and can't. So right away, we're going to consider that this is some good selling pressure here, pushing it back down. Okay? The buyers are weak and the sellers are strong. So we take it short right here. Now, next thing you want to do, you want to stop out here. Or do you want to stop out here? Where would you stop out? Anybody? And be honest. Let's say you took a short right here. Michael, where would you stop out? All right, so yeah, so let me give you an example, Michael, why you shouldn't take this to the middle Bollinger Band, okay? And why you should have reassessed after it broke the 5 MA, okay? So right here is where we should have stopped out. Right here is where we should have stopped out, and then this continues to go up. And then, I don't have it on the chart, but it continues to go up. So for mini pup, remember, or for trends, you don't want it to break the 5 MA. You could always reassess it. There's no point to let it go all the way up here when you could reassess and wait until, if it wanted to come back down here. Okay, and then you would be able to reassess it down here. So the earliest signal to get out is definitely the stochastics cross up or the close of the 5 MA above the 5 MA. Okay? Now, since you're going to be using stops and for reassessing and mostly as pausing, a lot of times when you do that, you could actually also catch a trade reversal. So what we like to say is, who better knows how weak a stock is performing than someone who is long, and who better knows how strong a stock is performing than someone who is short. The quicker you reverse, the stronger your position becomes. Treat these as exhaustion, tightening trades to the next bumper, especially with mini pups. Now, basically what that means is look for when the stock is tired or when it's basically extended and it's already at its upper Bollinger Band and it seems to be getting tired. The key is to know when it's a wiggle or a true reversal, and this is definitely something that you have to get acclimated with and be able to capture very little nuances that may occur, and they can be different at any given time. I mean, the market will always be different. So this will be the last example that we'll be providing, and this is called the stop and reverse sequence. So we have, in the long run, we have a 60-minute put, okay, for the breakout. So we do have a sleeping giant here is what we like to call it. Then on the 5-minute, we have a perfect storm that's forming with this 60, okay? And what happens is it begins to fill right here instantly as they get in. So as you can see, they stopped out with 6 cents, and then they shorted it because on the 1 minute, okay, this created that mini inverse pop, all right? And with that mini inverse pop, they were able to take it short, scalp it, stop out here, right, at the 5 MA, okay, and then be able to take the reversal, all right, which is right here. So we stopped out, took a 6-cent loss, able to reverse it, okay, and we stopped out early because we weren't comfortable with that move. Pierced through the 5 MA, didn't look good. We reversed it, we're able to scalp a nice couple cents, make some money, and then get out quickly and be able to see the reassessment or the second wave for the perfect storm, right? So the first one was premature, and then the second one came up, was here, and then it broke out and started the perfect storm. So stops aren't really a bad thing. As you could see, stops could really shed light on a lot more opportunities. Think about it this way. How many times have you not stopped out and then stuck your eyes on one stock for 20 minutes while you missed 3 to 4 different other opportunities that looked 10 times better than what you were holding at the moment, okay? So by stopping out also buys you time with your eyes to the screen for other opportunities, and allows you to reassess and always be in the game and not to be able to get sucked in to these choppy markets where you'll get faked out and shaked out. And that's why stops, you don't have to think of them as negative. Start testing it out. Try it out. I guarantee it'll help you. Watch this recording a couple times and you'll see how it makes sense. So I'm done for today, for that stops or pauses session. Does anyone have any questions? Yeah, absolutely. But then what happens is you open yourself to windows of opportunities of reversals because of that. Because you stop out early, okay, you're able to take advantage that if you're correct, you may have a reversal on your hands. Just remember, Michael, especially you, because you take our education, for mini pups, you don't want to be going to the middle Bollinger Band. So go back to chapter 3 of level 2. And you'll realize that for mini pups, that's not the original stop. So go back to that. Yeah. All right. You want to be using the 5 MA for that. And you know, this is a hard concept to really acclimate yourself to. Oh yeah, I show 5 time frames of a stock that I'm inspecting, and also 5 time frames of the SPY that's correlating with it or apathetic to it. But I have 10 charts on the screen at all times. And talks. Yeah. All the good stuff. Yeah. But yeah, so it's a very hard concept to take into consideration and to be able to build upon it, especially for traders who are not green, people who already have their own patterns and their own what do I say? Their own way of trading. It's going to be very hard to break that pattern. So try to really focus on that little by little. We like to do piece by piece and build upon it. But it's a very good skill to be able to take advantage of because you'll definitely be ahead of the pack. Nice, A. Good stuff. I'll be seeing you soon then in the chat. Anybody else have any questions? Let me check your Greece comment since we were talking about it. Greece news over. They are exercising their option to pay at the end of the month. There you go. All right, so I guess all we really have is the job numbers. Yeah. So anybody else have questions pertaining to the webinar, the subject, NinjaTrader, or education, whatever it may be, before we sign off? All right. Well, we're going to have this recorded so you guys have the ability to rewatch it. If you have any questions, you could email me at support@alpha7trading.com. And hope to see some of you soon. Oh, someone's... All right. Take care, guys. Enjoy the rest of your day. Thank you, Ephraim, Michael. I'll see you guys tomorrow.